Well, welcome back. Now a look where markets ended another volatile week after we saw renewed tensions with Iran and big movement in semiconductor stocks and the price of oil. Joining me now is the founder and author of the Bear Traps Report, Larry McDonald, back with me. Larry, great to see you. Thanks so much for being here.
Thanks, Maria.
So a real volatile week in terms of a rollover on AI stocks. Semiconductors led a big sell-off, then they led a recovery. What's your take on where markets are today and where things are headed for the second half of the year?
Well, the month-end, quarter-end, like we talked about maybe 3 or 4 weeks ago, turned out to be enormous because the momentum trade, everyone was long momentum stocks and high momentum stocks, and they were short healthcare and software names. That kind of is violently reversed, one of the biggest reversals in 30 years. So we got that right. But we've been holding these cage matches in the last couple of days with bulls and bears in the Zoom room. And it's hilarious because they fight to the death. But the best part is, this isn't coming out of my mind. This is really listening to the top institutional players out there on bulls and bears. And I can tell you right now, this battle between Zuckerberg, so the Meta, Microsoft, CapEx battle, and it looked like the beast inside the market was like really pressuring them to slow down the CapEx. And this week, they really reversed it, where they're not backing down. And Zuckerberg actually has a lot of compute that he can sell, so that's where the bulls are coming at him. But the bears are really pointing to off-balance sheet financing and just the amount of free cash flow destruction. So we're still seeing the bears are more confident than ever, and a number of the key bulls that were really bullish semiconductors have turned bearish.
Well, it's turned bearish. All right. Well, look, I mean, you talk about all this spending. That has been the backing of this market for a long time. The Federal Reserve recently found that CapEx from Amazon, Google, Meta, Microsoft, and Oracle reached $412 billion in 2025, or 1.3% of GDP. The spending is expected to continue, but are you of the mind that if we see any cracks in the spending, that will mean a crack in the overall stock market?
Right, because the tech sector is 50% of the market now, which is really pretty insane. And so, if the market, the beast inside the market, wants them to slow down on capex because they're really destroying for free cash flow, but they're doubling down. They're doubling down. So that's where the second half of the year we see a continuation where money's coming out of tech and going into all the energy companies and the infrastructure that's going to really support the U.S. power grid, data center construction, and so those stocks are still really cheap relative to tech, and I think that's where the money's going to go.
But let's talk about earnings, because second quarter earnings season is about to kick off in a big way next week with the major banks. Tell us what you're hearing on the major banks and what you're expecting from the second quarter reporting season.
Well, remember, we wrote the New York Times bestseller about the fall of Lehman Brothers, and it was really called A Colossal Failure of Common Sense. And we have hosted calls this week with really famous financial analysts, and people that got the subprime trade right. And we've been friends with these people over the years, and they were really bullish on the banks. And they think the banks are actually going to show a good quarter, but the off-balance sheet financing that Bank of America is exposed to and a lot of the other banks is really daunting. And if something goes wrong with this CapEx build-out on the data centers, Zuckerberg has 33 in his back pocket himself with a lot of really, frankly, disgusting off-balance sheet financing. I think the market's going to break these guys. I think that they are really setting up a colossal failure, like a banking potential crisis. And so I'm hearing from the people that were actually got the short trade on subprime mortgages right. They think this data center financing bubble and the off-balance sheet financing. So in other words, good quarter from the banks next week, but the market's starting to look under the sheets, under the seat cushions, and the market doesn't like what it sees.
Well, I mean, the problem is that some of these companies that are spending all these billions and hundreds of billions on data center build-outs, they're borrowing the money. So, you know, the question becomes, do the banks end up holding the bag if, in fact, any of this spending slows down, right?
Right. That's what they're looking at.
We'll be watching for any commentary from the major bank CEOs about AI spending and the borrowing attached to it. Larry, it's always great to talk with you. Your insights are incredible. Thank you so much.
Thanks, Maria. Have a great weekend.
Larry McDonald joining us.